Hello everyone, welcome to your channel Mr. Financial Literate. Today we will be discussing about Western Carriers Limited, which will be coming for a IPO, and we will be doing this IPO analysis of this company. So the things which we will look into in this video is about the company, the financial aspects of the company, the clients, the objective of the IPO, the details of the IPO, and at the end, we will be giving you some important information which will help you to decide whether to apply for this IPO or not. Looking into the business of the Western Carriers Limited, this company was incorporated in the year 2011. The company is a multi-modal rail-focused 4PL asset logistic company. So as you can see the images behind, this company mainly deals with the logistics of the assets and also the goods. They deal in railways, waterways, roads, and also the airways. So all the four different kinds of transportation they have covered up, and they provide the logistic services for different clients. The different clients of this company is they mainly deal with metal sector companies like Tata Steel, JSW Steel, Vedanta. They also deal with the pharmaceutical companies like Cipla. They have a portfolio with Coca-Cola and also other FMCG products, that is Tata Consumer, Hindustan Unilever, and Sleepwell mattresses. They also have a business with DHL, and currently this company has served somewhere around 1,100 companies, different companies in and across different sectors. So the client base is very strong for this particular company. Now, looking into the financial aspects of the company, we will be covering three parts of it. The first one is revenue, the next one is debt, and also we will be covering the profit after tax, like how much the company is making profit. So, firstly, we will look into the revenue part of it. In the year 2022, the revenue of the company was somewhere around 1,475 crores, which increased to 1,637 crores. And at the current year, the revenue of the company stands at 1,700 crores approximately. So steadily, the revenue of the company is increasing year on year. So now coming to the profitability part of the company, in the year 2022, the company had a profit of 60 crores, which increased to 70 crores in the year 2023. And now currently at this year, the profit stands at 80 crores. So we can see that the profit has increased from 60 crores to 80 crores in a matter of 2 years. And the last main point here is with respect to its debt. The debt of the company in the year 2022 was 150 crores, which has slightly increased to 210 crores in the year 2023. And at the end, in the current year, the debt stands at 266 crores. But the important point what we have to look into is the debt to equity ratio, which still remains at 0.67. Debt to equity ratio, anything below 1 is considered as good. This company's debt to equity ratio stands at 0.67, which is a good sign for a company. The main important point what we have to look in this company is the profit growth in the last 2 years is somewhere around 50%. They have 22% of return on investment and also 30% in return on capital employed. So these percentages are actually pretty good because they are earning more than what they are spending. And also coming to the price to earning ratio, which tells whether the company is fairly priced or it is expensive. The price to earning of this company is 21.83, which is fairly valued at this current IPO level. Looking into the objective of the IPO, which basically tells why this company is coming for a IPO, the company has given three different points for this. So the first point is prepayment of their debts. So whatever debt they have accumulated in last 2-3 years, they want to prepay it so that their profitability of the company increases. The second important point for this objective is the company wants to build its capex, which basically means that the company want to purchase commercial vehicles and also the shipping containers, which will help them to increase their revenue and also bring profitability in the operations. And the last point here is the general corporate purpose. To run day-to-day business activities, company needs some of the money. Now we will look into the IPO details of this company. The company will raise 500 crores in IPO. and the books are run by JM Financials Limited and also Kotak Mahindra Capital Company. So these two companies are running its IPO. Now we will look into the important factors of the IPO, like the start date of IPO is on 13th of September and the close date of the IPO is on 18th of September. The price band of each share is 162 to 172 rupees. The lot size of this IPO is, for one lot you will get 87 shares. The minimum investment in this IPO is 14,980 rupees, which will be the cost of one lot, and the maximum investment will be somewhere around 1,94,000, which will be a cost of 13 lots. So as a retailer, we can apply one lot or maximum up to 13 lots. The allotment date is decided and it's on 19th of September. The company will be listing in the stock market on 23rd of the September, and it will be listed both in National Stock Exchange and Bombay Stock Exchange, which basically is NSE and BSE. After the IPO has opened, there is a sudden news which may impact its listing gains. So the company's family dispute has surfaced when the company has applied for the IPO. Basically, the brother of the CEO and MD of the company has raised an issue that whatever details what they have provided as a documentation for the IPO, it is incorrect. So due to this family issue, there can be a problem in the listing gains. Investors should be careful here because this family disputes requires intervention of judicial system. So until or unless it is clear, I would say it would be risky to apply for this IPO. If you like our content and the way of explanation of IPO, please do subscribe to our YouTube channel, Mr. Financial Literate. And also, if you want more information about these things or stock market updates, you can contact us and directly DM us. Thank you.